Greetings, members, one and all of the Salivation Nation. We refuse nothing but the best when it comes to gold. And even in this market, the way things are going, we should expect nothing less. Let's explore! That's right, we're holding out. We're holding out for gold. And what does that mean exactly? Well, Merriam-Webster defines that phrase to refuse or accept to agree on something in order to get something else. That's just it with gold. What are we going to get for it? The prices have come down fairly dramatically, multi-month lows as of the recording of this video. Now, obviously, the market could turn around very quickly to the other side. In fact, whenever we see pretty big drops, substantial drops for a day or two or multiple days, typically there is a correction somewhere along the line. When that will be, I don't know. It could happen by the time you see this video. Who really knows? But regardless, this video is about holding on and holding out for gold. In order to hold out for something, you must hold on to it. Because think of it as a negotiation. Typically people say, all right, we have beat this down so far and so long. Were you going to just give up and go ahead and sell? And that is the case. That's the psychology of the markets for sure. And in this sponsored video, we're going to talk about that in the mining sector as well. This video is sponsored by Gold Mining Incorporated. But before we get there, let's talk about the metal itself. Because mining, it certainly has its origins in holding out for the best results when drilling. And for gold, now that it's in your hands in the physical form, you have to decide what's best for you and your family as far as how this metal has performed over the past couple of years. But really, it's about how it's performed over the past decades, over the past centuries, over the past couple of thousands of years. The history should be the guide in terms of gold acquisition and holding it. Now, I've talked about silver as well. Silver is a metal that certainly has been very volatile, and I've been hearkening and up to the fact that gold tends to be a more stable store of wealth. Why is that? Because gold is treasured. Silver is used. It is utilized. And as a commodity, as an industrial metal, gold certainly does have some of that aspect. That is part of why companies like gold mining are in the ground looking, trying to find good drill results to be able to mine more of it. Not only for the fact that it's being treasured by central banks around the world as a tier 1 asset, but also because it does have some applications and uses that are quite unique, because gold is a metal that does not corrode, so it is used a lot in agencies and organizations and science and technology, where silver really can't be applied because silver does react to the elements and to the environment. But Gold Mining Incorporated is a company that is on the New York Stock Exchange as GLDG, and they are the leading company in the Western Hemisphere for gold acquisition and development projects. They take advantage of market downturns to make bold acquisitions. And we are in a market downturn now, and they have actually just released some news very recently here on June 23rd about initial assay results from the first 2 holes of the 6-hole 3,600-meter drilling program on the La Garrucha target. Yes, indeed. And I'll post a link to their website, and you can see all the latest news there. Their balance sheet is vibrant and healthy. They have a market cap of $227 million. Gold Royalty, the position is $83 million, and their cash position is $8 million. Subtracting these numbers from the market cap gives us $138 million. The company owns 32 million ounces of gold equivalent resources. So if you divide that number of ounces by the 138 million, it gives the unprecedented low of $4.30 per ounce of gold. This is a great deal considering most deals this year in 2022 are averaging $50 per ounce. So it's a tremendous value. Amir Adnani, the company's founder, knows this. He has a huge personal stake in shares. And what's really exciting is that Rick Rule and Doug Casey are also shareholders. Amir Adnani's uranium companies have been huge winners over the last 2 years and have been profiled on this channel. Uranium Energy Corporation and Uranium Royalty Corporation are up over 400%. So given Amir's expertise and the management team that surrounds him, Gold Mining Incorporated is on the path to the best performing stock in the bull market ahead. But that's ahead. Where are we at now? Well, this is a down market in terms of gold prices. At least right now, there's a lot of volatility in the markets for sure, but this is a good time to admire and hold on to your gold. It's not a good time to sell, that's for sure. But if you are in the position, it is a good time to buy, both in the physical and to be versatile and to look and expand out and diversify from within even just the gold sector. But obviously a company like Gold Mining Incorporated, Amir Adnani's expertise and prowess has led him to do very well in the uranium sector. So how does gold mining stock perform when gold's price rises? Let's talk about that. It's kind of hard to think in those terms these days, but sooner or later it's going to come around for sure. Well, let's look at a couple of areas here and time frames. From December 2013 to March 2014, there was 164% compared to spot gold, which was an 11.49% increase. That's a 10 times leverage. And then from January to September 2016, it was a 665%. And that's in comparison to gold spot, which is a 22.65% increase. That's a 30-time leverage of the spot price. From December 2018 to February of 2020, before really things started to hit the fan in terms of the pandemic, we saw a 150% increase compared to spot gold, which is a 26.01% increase. That's a 5 times leverage. And then from March to August of 2020, it was a 218% compared to spot gold, which is a 36% increase. That's a 7 times leverage. And so the analyst gives a price target 2% higher than today. So that is where we're at. So there's some upside potential here that something to consider when looking into and doing your own due diligence and research on Gold Mining Incorporated. And that's something I always stress that people should do when looking into any company or any investment strategy. And that's what this is. It's an investment strategy with Gold Mining Incorporated. So between the years of 2010 and 2012, when gold stocks last saw a massive multi-year bull market, the value of the companies that Gold Mining Incorporated acquired their products from and the distressed bear market that followed from 2013 to 2015 was collectively $850 million. Today, excluding the GROY position, the Gold Royalty Company, this is alone worth $122 million Canadian. The other projects are only valued at around $100 million Canadian, 90% less than 10 years ago. So Gold Mining Incorporated is certainly positioned. They have several great projects all across this hemisphere that you can peruse and look in their investor presentation. And I'm going to put a link to their website below. And I encourage you to check it out to see if it's the right thing for you. And in situations like this, as is always the case, there is some risk involved when making investment strategy and purchases in certain gold mining companies or any mining company. But nonetheless, this is an area in a way that you can essentially dollar cost average with a little bit of risk in a metal that you believe in that is the ultimate hedge against economic instability. And as gold mining continues to make news, such as it did on June the 23rd with this project, with these drill results, very impressive drill results, they are poised, I believe, for a further increase in stock price. But do your own due diligence. You can also contact them through their website and see what you think there and ask any questions that you may have. And I hope you found this video insightful and enjoyable. I would like to extend a multitude of gratitude to you all for taking the time to watch and to hold out for gold.